Please remember that nothing we say here should be taken as personal advice. The conversation is for entertainment purposes only. If you have questions about your financial situation, please talk to a licensed financial advisor. All right, welcome to another episode of Future Money, where we talk about the investments of the future
that will make us money. Hello.
What's going on, man? It feels like it's been a while, even though it hasn't.
It's been 3 weeks, I think.
I don't know.
I'm excited today. We have an amazing guest, Mariam Sughayer, who's the CCO of Redfin and a very good friend of GK and myself, and who really kind of decided to say yes to come to the podcast. So hello, Mariam. Thank you for joining us.
Hi, thank you for having me.
Yeah. What are you calling in from?
I'm in Seattle, Washington, but
Seattle.
as Hatem knows, I'm a born and bred California person.
I'm
How do you cope with that?
We're going to talk about climate change later. It has impacted Seattle in a positive way in some ways.
Okay.
It is a gray day today. I will not lie. I'm looking out the window. It's gray and rainy, but for the most part, if you can get through December through February, spring and summer are awesome here. Yeah.
So it rained like for 4 days here, and basically the entire city shut down.
I know.
We don't have to file taxes for 6 months.
Apparently, America doesn't have to file taxes until October because it was raining a lot. Or something.
Yeah,
sounds good.
That sounds amazing. No, I went to college in Seattle. I went to UW for a couple of years, and it was unbearable 20 years ago. Because you have 9 months of basically sun, but it sounds like it's different now.
Locals, the people who are from here originally, they all say that it is very different, that it is hot summers. Winters are actually slightly colder, but because you're getting snow now every year. But that said, like the spring and summer are way warmer. I remember when I first moved here, people are like, we don't need AC because it's like over 85 days of the year. And last summer it was over 80 for 2 months, and we installed AC. So
I mean, one thing to say about Seattle, summers are insane. There's no better place on earth during summertime.
Yeah.
That's
San Juan Islands.
Yeah.
The San Juan Islands are actually the thing I love the most. Access to all the islands are just incredible. We spend most of our summer out there. So that I do love it. I like it more than I expected, but I'm like, my blood is California blood. Well, I'm retired. Retirement.
You escaped our taxes. I get it.
I know. It's all the income tax. It's so true.
Yeah. Well, we'll talk about that today. But Mariam, maybe give a little background about you. I mean, obviously, as you said, you're born and bred in California. You've amazing background at Disney and then Redfin now. So maybe a little background there, and then I'd love to dive deep into some of the stuff they want to talk about today.
Yeah, I'm happy to. I was born in California. I went to school in San Diego. And then after that, I moved to New York for 6 years, which was great in terms of teaching me and how to play and work very hard. And then I came back and I had a few years in the Bay Area and then back to LA. So I did full circle. And I was at Disney for 10 years before going to Redfin. And I had like 3 different jobs while I was there. My last one being corporate crisis communications for 4 years. And I learned a lot. A lot that happened during that time, but it was an awesome time to be at Disney. It was the golden years of the Bob Iger regime. And, when I started, we had just bought Pixar, and then it was Marvel and Lucas. And it was just a great time to be there. I went to Redfin because, Hatem, I told you this, I sort of wanted to be the head of something. I wanted to be in charge.
You always loved real estate too. I know that.
I always loved real estate. My part of it, my love for real estate is that my dad did a lot of real estate investments when I was a kid. He's a structural engineer. I used to go on long road trips with him, and we'd look at properties, and I just have fond memories of that. But also, I'm first generation. My parents are immigrants from the Middle East. And I remember the day we bought our first house when we became homeowners. And it was a huge moment. It's emotional for me. It's also wealth generation. It's, it's so many things. And you're your home is your destiny. And I just really believe and care in more people owning homes.
Yeah. So listen, we could talk a lot also about your Bob Iger stories, but that's not
That's for a different
that's not the
time.
forum. I would love that.
We'll have to turn off the recording for that.
Yeah, exactly. But listen, Miriam, like real estate is such, as you said, such a big part of generating wealth, right? I think, half of all wealth is created in real estate.
Yeah.
Most of people's wealth is in real estate. We, as advisors and investors, we talk to clients all the time about buying homes and when they need to, and we always encourage them to do so. So I'm so glad to have you here because, it's been such a weird few years with the pandemic and so forth. So we're going to start there. Okay.
Yep.
Oh shit, we had a pandemic.
Yeah.
What happened? Okay. We got locked down for 3 months.
Oh boy.
And then, right? Oh boy.
PTSD.
It's supposed to be 2 weeks. Remember when everyone goes,
Yeah,
what?
right.
2 weeks? And
Yeah, I remember that. I remember actually texting with a coworker on March 3rd, I think, because Seattle was sent home before the rest of the country. If you guys remember, we were like ground zero.
That's right.
I had a reporter from New York City call me saying she was going to fly out here to report on what it's like in Seattle, not knowing what New York was about to go through a month later.
Shit, that's right.
It was crazy. But basically, we get sent home. We think it's going to be 2 weeks. From a housing market perspective, to make a very long story short, it was at a standstill. I mean, you couldn't even tour homes, right? Like, it was impossible to transact. And so I remember this report that we put out that was like, the housing market is just, at a standstill. And there's just nothing happening, and we don't know how we're going to get out of it. And then from there, we kind of, people persevered, and there were more virtual tours. I remember like in 1 month, virtual tours went up 30 times. Like people figured out sight unseen purchases skyrocketed. People were buying homes, without seeing them. And in this moment, we're thinking like, okay, like we're going to be in a housing market glut for a long time. Like, let's brace ourselves.
Was that the thinking within Redfin at the time? Like the glut is going to, okay.
Yeah, we were like, we had no idea. We were like, who's going to buy a home? You can't even tour homes. Then what happened was the exact opposite, right? Working from home made people realize they needed way more space. They needed separation. It was, suddenly it was your school. It was your office. It was, it was where you spent all of your time. And people left the cities, and the suburbs and rural areas boomed. People needed, at least 2 to 3 extra bedrooms, and X amount of square footage space. They craved outdoor space, more private outdoor space. So it really just led to this explosion in housing, and it just was the exact, like we were preparing for cold winter, and it ended up being the biggest housing boom we've ever seen, and so
it was good to be in real estate last year. That's for sure,
2%
right?
interest rates helped.
I was like, I'm retiring next year, and then it was actually retiring. And
Unfortunately, all good things come to an end.
So you talked about a couple things there, right? Like changing the needs, right? People want out, the home became the office, right? We obviously know that's not going to last forever because people are going back. Mm-hmm. Do you think what's lasting? Like what's going to be here going forward?
Yeah. I mean, I think my personal feeling that I have just from talking to our agents and talking to like learning the stories of their clients and in these migration, like in these destinations where people moved, is that once people get out of the rat race, like if you leave LA or New York and you go to an affordable city and one spouse doesn't have to work and you get a lot more space, for your money and a quality of life, they usually stick with that. And they don't go back. They realize like, this is what they just get used to that. It's hard to then backtrack to, having, less. And by the way, my big dogs just arrived.
Here they are.
Hey.
I'll be down in a minute.
Makes every podcast more exciting.
Yeah. Well, you know what? This is like the work from home thing. It's like,
perfect timing.
Exactly. It's just so funny. I remember when the pandemic first started, I was like, get out of the screen. And now I'm like,
everyone does.
Yeah. So okay. So everyone moved to Idaho, right? Boise, right? Are they really going to stay there? Like,
it's mixed. I mean, I do hear like, so first of all, there are the people who remote work is a permanent thing for them, but there's people who it isn't, that they are being called back to the office. Right. So that's part of it. So there are people who, they bought before the market exploded, let's say. And now they have a ton of equity. I mean, in Austin, for example, housing prices went up almost to 50% at a certain point in some
Right.
neighborhoods. So you doubled your money and you can go back, you can sell
Sure.
and go back. And so there's that. There's also FOMO. I think it depends on where you moved, right?
Sure.
Austin has a lively downtown and culture
Yeah.
and city, but I think it depends. Like, we have heard from some people who their clients sold and went back to their city because they just
Yeah.
once the the lockdown was over and you're out and about, because it's one thing to buy when you're not really
Right.
experiencing where you live, everything's shut down,
Yeah.
and everything opens up and you're like, well, this isn't for me, maybe, and yeah.
Yeah, there was this fear that New York, San Francisco, like specifically because they're crowded cities, right? Like that the era was over, and
Oh,
I don't think that's happened. That does not happen at all.
yeah.
Because it turns out people really like cities
Yeah.
still.
So you know what? San Francisco is an exception to that.
Yeah.
So that's a bigger problem, right? We have politics, we have homelessness, an issue like that. But everyone has been calling for New York to die forever, right?
Every single downturn,
Yeah.
there's a New York is over.
Yeah.
Like the trend, nobody's gonna pay, nobody's gonna pay $2,000 a square foot for for a rundown apartment, and they just always do for some reason.
Yeah, no, New York will never die. It's
yeah.
Yeah.
So you're saying obviously if the cities offer some amenities, people will stay, because I know we're seeing some people, especially younger clients, who maybe move to other places and not Austin, because as you said, Austin offers a lot of cool stuff to do besides just living there, right?
Yeah.
But people, I've seen some clients who maybe bought a place in Idaho and like, I'm really not into it. I'm going back to LA.
Yeah, exactly. So, yeah. I just think that, like, how they say, like, you shouldn't cut your hair after a breakup or something. Like, don't make big decisions in a moment of distress. Like,
sure.
That's kind of how I feel about maybe moving. It's like, just wait. Like, this is a crazy situation. And anyway, but people moved for different reasons too, right? I mean, like, if you just could not afford a house where you lived, you felt like you were hustling and working hard, maybe you're just like, listen, this is my chance to actually build a life and build wealth.
It's a real thing. I mean, we have clients, and a lot of our clients are on the upper echelon of society, and clients who are not ultra wealthy but mass affluent, making $500,000, struggling to buy a house in LA. They're like, I can't buy like $500,000 and I can't buy a house. Like it is a huge, like it makes you feel bad because you're like, I thought by all metrics I'm actually doing pretty well. How come I'm having such a hard time?
There was a survey we did, I think this was last year. Basically, the issue is you can be making tons of money, but do you feel it or not is the question. And owning a home is a huge part of feeling wealthy.
Sure.
And if you don't own property and you're a renter and you don't have that stability or that wealth generation, no matter how much you make, you just don't feel it as much. It's like money in and money out, and what are you building over time, and how do you feel about your investment?
Yeah, it's absolutely true. I mean, we talk to our clients all the time, and if they don't own property, they're like, hey, listen, I really don't have an asset that really is growing and build an equity towards. I want to go back. I want to talk about affordability a lot because, there is different generation that feel differently about, kind of where they are and the opportunities. And we have this conversation right now about the American dream and is it there and so forth, and we have a lot of people that work with us, with us, who are younger, who feel like they can really get there. As Ayal said, like, what's the experience from I'm a Gen Xer. Ayal is kind of a Gen Xer.
Xennial, as they call us on the.
Wait, sorry, what are you? You're a.
I'm technically a millennial. I was born in 1982, but I have two older brothers, so like all my pop culture references are from the 80s. So I consider myself a Gen Xer, even though I'm technically a millennial.
Yeah.
So if you're a Gen Z right now, like, do you have really no ability to buy a house, or at least you don't feel like you can buy a house in LA or Seattle or that matter, New York? What are you doing? What are you thinking?
The Gen Z people who can buy a house probably had boomer parents that bought houses when they were $5.
Cool. And then
kind of equity and can give them a leg up. I think that's just the reality of it until we build more housing stock. We are in this situation.
Yeah.
There, but yeah, I think the affordability thing was bad leading up to the pandemic.
Yep.
And the pandemic just reset everything. We've doubled the amount of inventory of homes that are worth over 1 million
Yeah.
just since the pandemic.
So let's talk about that. Like
Yeah.
we don't have enough homes. That's as simple as that.
Yeah.
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 So
Sorry, go ahead.
Yeah. So basically the issue is that building has dwindled over the years. It's a trend that started in the 90s. We were in good shape. The 70s and 80s, we were building tons of single family homes. It started to dwindle down in the 90s. It kind of picked back a little bit up in the early 2000s. And then after the housing crisis, it really started to go back down. And so, one of the things that we're seeing where people are moving is places where the policy favors builders and there is inventory.
Right.
And that impacts pricing, right? That's why they're affordable. There is stock. It's just supply. It's just basic supply and demand.
So to put some numbers around that, right?
Yeah.
Like since 2008, and not exact, but basically we needed between 1.2 and 1.4 million new homes a year. And we were just building, 800, 900,000 a year. So we accumulated a 400,000 home deficit a year that's compounded over the last basically 12 years, right?
Yeah. And overall, Freddie Mac says we're in the hole about I think it's 3.8 to 4 million. That's in general, if we wanted to balance the market and help improve affordability, we need 4 million more units overall.
And policies like California, Washington, you see people move into the Southeast and so forth because simply the policies that favor builders. That's what you're saying, right?
Right. Yeah. In the Southwest, mostly too, in Arizona, Vegas, Texas, they're just building like crazy.
Yeah.
And the builders don't have a hard time, getting it done.
Trying to build anything for example, in Santa Monica here.
Oh yeah.
I bought my house during the pandemic.
Yeah.
Right when things lifted.
Yeah.
And there was a person who bought a house 2 months after I did. And they tore it down and are building. And it's been almost 3 years now.
Yeah.
And the house is probably, I would say, 75% completed.
That's amazing.
Because of permits and all this stuff. And we won't even get into income taxes and all this other stuff that, unaffordability, all this kind of stuff is all pushing people to go to states like, Florida, for example, which I read today. Miami has the highest year-over-year growth in housing. And San Francisco, as you mentioned, has the lowest. And that's sort of an amalgam of policy, of affordability, of, just building conditions, etc.
That's right. Yeah.
So being on the front lines, Mariam, do you see some of these, for lack of better words, blue states? Because I think that's where the red tape exists, right? Enabling or really kind of thinking through, hey, we really need to allow builders to build more homes because we want people to stay.
Yeah, I think it's becoming more of a topic. I really think it's coming to the forefront just because of how dire it is. Do I think it's going to happen overnight? No, but I think that, at the end of the day, you can say you're pro builder, but you could also say that you're pro affordable housing.
Sure.
And it's I think it's just how you speak about it. And it's everybody wants to say face value, oh no, we're not pro builders, but it's just such an unfair moniker. They're building shelter everybody needs, and it's there's we need to talk about zoning. Not everything needs to be a single family home.
Sure.
Miami, for example, has a ton of density, and so I think we need to rethink that too. I mean, in Seattle, where I live, we have the highest percentage of single family homes for a major city, and people love it, but also it comes with, downfall. And the other thing I will say that is just sort of ironic, and I said earlier, I'm a card carrying liberal. However, the NIMBYs in big cities are usually liberal neighborhoods that are we believe in affordable housing and access, but then
not in my neighborhood.
Build an apartment building 1 block away from my house. I get it. You're worried about the value of your property, but still, if we're going to live our values, we need to live, if we're going to believe our values, we need to live them. And I think that, zoning for more housing dense housing is important too.
Yeah, thank you for saying that, because I've been involved a little bit with politics in LA, and there is some movement, even to kind of go back to hey, we need to all live our values and not say, hey, if we want to have more housing, we all need to kind of, allow for these bigger apartment buildings in cities like Venice and Santa Monica and so forth, and I hope that's a new wave that's going to happen.
Yeah, me too. I agree with you.
Yeah, the biggest problem we have in cities like ours is it's hard to unwind the red tape. Once the red tape has been placed, it's hard to go back and there's all these requirements, and for builders, a lot of them, they're actually good. They're placed there for the protection. For you have OSHA requirements and you have building permits and but to sort of try to backtrack this stuff is this bureaucracy. It's very difficult to backtrack it.
Yeah.
So the progress, to your point, if it happens, will be very slow. It's like moving the Titanic, right?
Totally.
It's like
it's not easy.
I think part of it, and what I've seen here, being involved a little bit in Venice politics, is that younger people need to be involved. If they want to have more affordable housing, they need to get to the city council. They need to get into, the local jurisdictions and really push for some of these policies and really be, sober about what needs to be happen. Not just allow for things to happen and be pissed about it.
Yeah, because it's their future too. Boomers are comfortable and happy. They have 10 times the wealth as millennials.
Sure.
They're not going to fight for it, but they need, the people that it's their future. I mean, one thing I'll add to this, though, is that, not all of this is bad. I actually really like the idea that wealth is spreading throughout the country. I feel like it's like we were operating for so long where there were like 3 or 4 cities you could get rich in, that you could build wealth in, that you could succeed in. And one of the things that I think is good, actually, is you're seeing people it's not just people, it's jobs, it's industry spread, it's not, and by the way, the thing we could also get into maybe on another podcast is corporate migration. Like companies have also left. California. So anyway, I do think also maybe long-term we'll look at it and say, you know what, the states with the best environments and policies benefit from it. And now there's opportunity across the nation. Like you don't have to graduate college like me and only go to New York City to build your career. There are places to go,
And adding to the demographics of areas, which used to be more rural and now becoming more urban, right, does help the progress.
That's right.
More education, more people, more diversity,
more culture.
Right? If you come to LA, you go to Seattle or New York, diversity, there's no escaping diversity. It's there.
Yeah.
Right. But if you go to rural Iowa, probably not so much. But as these companies move in, hopefully, and broadens out the picture a little bit more, hopefully we'll have better population demographics across the country and not just in a few states.
And by the way, it does impact politics too. We've done a lot of reporting on, we call it our red to blue migration, but blue state people are moving to red states. And I think it's actually a good thing. You're seeing a mixing of ideology, seeing,
Georgia, a perfect example, right? Georgia, traditionally has always been red and has been blue the last couple of elections. And, Texas is, in spite of the headlines that come out of Texas, it's becoming more purple as well.
That's right.
Compared to,
I think whenever you have more diverse idea and people just intermingling, that's just better for our country, right?
For sure, and the same applies on the other side. We California could use some red people here also.
I totally agree.
We're very blue here.
Yeah.
A lot of
hour east.
We could use some diverse ideas for everyone. It would definitely help.
Yeah, I totally agree with that. I think movement is just healthy too. I mean, I feel like it sort of just feels like it's a good thing to try different places, to build in different places. There's all these areas too that they're getting revitalized. If you see the downtown of some places, they used to be a diner and a gas station, and now there's a brewery and an organic restaurant. And I mean, they're these people are leaving these cities and taking their taste there,
right?
And so it's helping out other states, I think. So that's the positive part of it.
So you think obviously some of these trends would be long lasting, right? I mean, work from home, obviously you're working from home.
I'm working from home.
Yeah, but a lot of people, we were talking about this before the podcast, a lot of people are coming back to the office, right? Mm-hmm. So, I happen to think that if you're young, and we have a lot of young people in my office, culture is important. You can't really build culture over Zoom, unfortunately, right?
Agree.
So people going back to office makes sense. How do you think that then work from home becomes part of this whole equation?
Yeah, I think that it's going to be, there's going to be some companies that stick with the remote work policy. There's a lot of tech companies that have just like decided that's it. We're going to be remote.
Yep.
Time will tell what happens there. Like, like what will happen with the culture? How will that impact, the company overall from a strategic perspective, and then there's the companies that really are trying to bring people back and reclaim that culture. Amazon, big, obviously the main big company here in Seattle, they just announced 3 days a week.
Yep.
And then there was a huge uproar. So what I think is going to happen with a lot of at least tech companies is going to be this sort of hybrid, like 2 days a week. And so what happens there is that people don't move to Boise; they move an hour north of here, or one of the big migration destinations has been Sacramento. So why is that? Because you can live in Sacramento and you can get to Silicon Valley 1 or 2 days a week. So that's the trend I'm starting to see happen. People are trying to figure out like an equilibrium. And this isn't the tech. I'm talking from a very tech influenced background. I know that in the financial sector in New York, people are back. They've been back. And so, yeah, I mean, I think that in the tech place, it's going to just land, I think, in the middle with this hybrid situation. But I do think there's going to be a handful of companies that just stay remote.
I mean, I'm excited. Like there is an opportunity here to recreate like what work means, right? Like when we get together, what do we do? Like I know I have a tech client that I work with. He basically, his company was fully remote, but they bought or rented kind of cool apartments in different cities where employees can go in and just kind of hang out for a couple of days to do some kind of, meetings and stuff. It's a really cool way of thinking about, hey, a new space for people to congregate, and they have it in different cities. And so there is an opportunity here for us to really rethink that.
I think there's definitely going to be flexibility. Like, I think, it's like anything, I think it's going to be a benefit, right? We offered 401ks and health insurance and dental. And I think remote work, or at least hybrid work, is going to be one of those benefits that's going to entice certain people to come in. But I am a firm believer that creativity happens kind of between the lines. Like, it doesn't happen when you're meeting, the 2:00 meeting at Zoom that you have scheduled with your, 2 other people on your team. Like, that does happen. But, I use this example. We went out to lunch, me, you, and Ross one time, and we were talking about something that had nothing to do with anything. And then we came up with this really good idea, like, out of nowhere. And that's the stuff that you don't get from work from home. So at least the hybrid work environment allows you opportunities to get that. But I do think if you're 30, you're asking for that as a benefit.
And the thing I will say is that I think it's so different based on where you are in your career. Like, I've been doing this for 25 years. If I never get promoted again, that's fine. Like, I feel very comfortable. I have had time to establish myself with all of the, people I work with. The entry level folks are the ones I worry about the most. Like, I remember this one job I had. I sat in the pit with the head of communications, and I heard him all day on the phone with media, and it was like getting a PhD. You know what I mean?
For sure.
And it was like, I just can't imagine how I would have built my career in this environment. It would have felt very different. And so
this may be the best advice actually you've given right now. Like, if you're young right now, you got to get back to the office.
That's our premise.
Find mentors.
Always been our premise, right? Is like, the new people that we hire, we require, like, we offer some hybrid work stuff, but we require that if you're new, that you're here, because like you said, you don't get it. And I'm like you. I was in the bullpen when I started, and I sat next to the COO's office and heard all this stuff, and he said things complimentary sometimes, not so much sometimes. and you learn, like, it's that's the crucible in which you learn. And
100%. 100%. I agree with you. And I just think that, like, it's comfortable. I mean, I'm a mom of 2. I get it. Like, I get to pick my kids up. I hadn't cooked dinner for like 10 years. I cook now. Like, there's balance in life. My laundry's done by the weekend. Like, I love all that stuff, but also there is something lost. And I mean, I'm a big fan of reclaiming it. Like, there's just a conversation going on about whether we should go back or not. And as much as I love it, I selfishly for myself, I love it. But when I think about the company's culture and the new emerging talent, I really do feel like we need to figure something out.
Thank you for this really frank kind of opinion, because I think it's been lost, right? Everyone's like, oh, I just want to stay home because I want my flexibility, but we're losing some things, and those things are really important for growth and really culture. So you guys, Redfin obviously does a lot of work. I think actually, Ayal and I talk about this a lot, about the commercial, the Redfin commercial that you guys had about the Redfin app being basically,
The iBuy?
yeah, the iBuy, yeah. Um, but I want to talk a little bit about like kind of what's happening with tech and real estate, right? For a minute, basically, maybe not so much Redfin, other competitors to you guys came in and said, hey, real estate agents are going to be dead. It's over. We're going to do all the transactions. That obviously hasn't worked out. Talk me through that process.
Well, yeah, I mean, Redfin started out as, Redfin started out by being the first company to offer the map-based search. So, people had to get like listings, from their agent only, they couldn't get them on their own. And so that was a huge moment, like where we could all just search for real estate listings on our own, whether we were actually buying or just being voyeurs.
I think we're all addicted to your app a little bit.
Oh, God.
They had an SNL sketch about it, about watching the, just
exactly.
in your 30s and above. Like what you do when you're bored is you go on a real estate app and you look at the inventory.
You're one of those millennials we're talking about or Gen Zers who are never going to buy. They just like, imagine.
Live vicariously.
Yeah. And so basically, this is before my time at Redfin, but there was this idea like of could we have a system where it's almost like a call center where agents are available to help you through the transaction, but it's not the traditional model of like you have an agent assigned to you helping you through the process. And it didn't work out. And actually, like we've doubled down on the agents being necessary. I think that the way we look at technology is not that it makes agents obsolete. It just makes them way more productive. They get tons of lead generation from our website. They close way more deals. And so it's much more about efficiencies and creating a really easy experience and giving consumers information. Like, the other thing, like, if you list your home with Redfin, it's viewed 50 times more on the website. Amazing. And so technology also helps the seller and helps the buyer. And so it's sort of one of those, and by the way, so those efficiencies drive down the commission. Like a lot of people think, well, you get what you pay for. It's the same experience. We just have created a model that drives down the costs. So it's a full service experience that you'd get with any other brokerage. I think that other brokerages like to kind of, call us the discount brokerage, but it's really an unfair moniker. It is the same. It's the same experience. So, and so that's how we use technology. So no, we do not believe that agents are obsolete. There might be people out there who want to transact directly. All they need is like a form or, do the paperwork. But for the most part, people need agents.
I mean, I bought 3 houses in my life. I could not imagine being able to do that. It's the biggest transaction in anybody's life, and you just going through it by yourself. It just sounds ridiculous.
It's just there's so many things that could go wrong, and there was this idea that we buy everything online, including cars now. And I go, well, it's different. You buy a car from a dealership or direct from the manufacturer. It comes off the assembly line. It's a little different.
It's totally different.
Right. Well, then when you're buying a house, and literally like, even when you were talking about virtual tours, which apparently was going to replace regular tours, and I'm like, you're not going to catch all this stuff, and there's a million rules, and there's a million things, and negotiating what the seller's going to pay for, and like there's just so much. I think like what you say is very important. I think a lot of people who are selling their house have the feeling that, well, I'm paying a really high commission for ultimately what I'm spending most of my time. I'm the one spending most of the time going on Redfin and looking at all the houses and figuring out.
It's just become more of a partnership. So before technology, your agent did everything. Like they had to find the listing, they had to take you to it, and now basically it's like consumers are doing more of the work on their own happily. They enjoy it. And so it's like, it's like you want more of a partnership, and you should probably pay a little bit less for that. There are people who need way more full service experience, and there's people who've bought 10 homes that are like, I can do this. I just need your help to make sure I'm not making a terrible decision.
Right.
And experts matter. I mean, like I call Hatem if I'm buying like 20K of stock. So why wouldn't I need an expert to also help me when I'm making the biggest investment of my life? So I just think that that's never going to go away. People with an expertise, like I'm not a DIYer here.
Would you care to comment then on what's going on with some of the competitors with this iBuyer program, like Open Doors and?
Yeah, I mean, here's the thing. I
don't want to throw you in the fire there.
No, I mean, let me just preface it by saying Redfin had an iBuyer business. We had it for many years. But if you listen to any of my CEO's remarks on any earnings call or any media interview, it was a part of the business, not the whole thing. It was like, we want to offer people everything, anything that they need based on what's going on in their life. There are people out there who are going through death or distress or something terrible is happening, and they do not have the energy or time. It could be a mom with 4 kids and 2 dogs. They don't have the time and the energy to make their house look perfect and get it on the market and deal with showings, and they just want to offload it. Right. And so there's a real need for that. However, Redfin's philosophy was that it's not the whole need, it's a portion. And, most people we met with when Redfin now was operating, that was our iBuying business, went with the brokerage usually. So we would consult with them, and most of them ended up listing with our agents. Zillow and Opendoor don't actually have that, didn't have that option, but Zillow and Opendoor were much more like that was their thing. It was iBuying, and so I just want to preface that. But that being said, regarding iBuying, as we know, the era of free flowing cash is over, and the margins are tight on iBuying. So when money becomes expensive, what you can offer a seller is not attractive to them anymore. So that is like the big takeaway. Right.
Two things to that. One is, even when margins were good, some companies
didn't. 100%. That's actually a very good point. Yeah.
So that's one. But two, I think to your point, when you mentioned, you call Hatem when you ask, to buy 20K in a stock, I think it's really important to think about, number one is anything money related is emotional. And this is what we talk to our clients about all the time. Emotions drive decision making, and there's about 10% of the population that is purely logical, can do it without feeling emotions, but most of the people do not. And that's ever more important with something like a home, because in addition to it being probably the largest investment you've made in your life, it is also the largest emotional investment you've made in an object, not your family or something like that.
Right. So emotional.
Yeah. So you definitely need somebody there to tell you, hey, this is great. I think, the idea that sort of agents are there to just sell you the house is part of the sort of idea that all agents are there to just gain a commission. Yeah. You want, like anything else, like in our job or your job, is to have somebody who's partnering with you to help you make this decision, that it's the right one for you, not just the one that's going to generate the biggest commission.
Yeah. And the best agents are the ones who, like, it right away. They are not all about the deal. They want you to make a good decision. All the agents I've worked with that are the best are like, they will steer you away from something, even if they're giving up a commission check. And that's a long-term game that works.
Exactly. They know that over the long run, that's going to benefit them greatly, be it from you in future transactions or from people you send it to them. Again, same in our field.
One thing I just want to add, going back to like agents and the value they add and the pandemic. So, during the pandemic, houses were getting 18, 20 bids, maybe even more, going 500K over asking. And people were miserable. Buyers were miserable. They could usually by the 5th or 6th lost offer.
Sure.
Offer, they just were just so miserable. And I talked to so many agents during that time that were like, I really feel like I need to pause and get a degree in psychology, because they became an emotional support more than anything. Like, they earned their stripes during that time, because it was so hard, even though it was like this hot market and everybody's like, oh, it's so great. It was actually terrible for a lot of people.
Yeah.
And this one agent I spoke with in the Seattle area got her client in a dream home after they'd lost out on 5 homes. And they were like, I'm out. I can't take it. I'm too emotional about this. I'm too distressed. Because, you walk into a house, as you said, it's emotional. This isn't just, you're like, I could live here. I could see my kids running around here. I could see my life here. And that doesn't happen. And it's a heartbreak every time. And so she called her client when a house hit the market, and it was the 6th try, and it worked. And it's like her dream house. She loved it more than any other one. And I get chills. Like, that agent is worth weight in gold, because that person's in their dream house and she didn't let him give up. And it was like emotional coaching and support and just like hustle, but the story there's the house hit the market on a Friday, and she called her in 20 minutes and she said, we're going to go right now. Drop what you're doing. She was at work, and she's like, no, drop it. Cancel your meetings. We're going to go see this house. And they put their offer in that night.
Wow.
And we
Yeah.
bought the house.
Hey, emotional support. We know something about that.
we know something.
2022.
I told Hatem, I'm like, I've thought of you so much. I'm like, you talk to you guys, like,
It's funny that you say that because I actually do have a master's in psychology, and I tell my
perfect.
I tell my clients that all the time. I go, most of my job is actually psychology, and it's also investments.
Ayal is like the in-office psychologist. Everyone comes to his office to like cry a little bit. You know?
Yeah. Not quite as good as Wendy from Billions.
Yeah, we made some even some, what are they called? Some
patches. So we
patches.
some bear market. Just earn our stripes during these times.
I want to ask you about where we're going. Okay, and I get asked all the time to put out my my crystal ball. I'm gonna ask you the same right now, right?
So hard.
People are still distressed. Like, people don't know where rates are going. They don't know where the real estate market is going. We haven't seen the 30% that everyone is expecting. My agent, who's a very good friend of mine, told me we still have a disconnect whereby sellers think it's still 2 years ago.
Yeah.
And buyers, I think, is financial crisis.
Oh yeah.
So we have this massive disconnect. Like, where are we and where are we going?
It is not 2008. It's so funny. We say that all the time. Like, it is not. I just think people have this recency bias. Like, there have been housing downturns that weren't 2008, but 2008 is just like, if prices go down even 1 percentage point, it's 2008. Obviously, it is not. It's such a different environment. People who own homes are financially secure and stable.
Yeah.
And so where we're going, I wish I could tell you. I would have said something very different in January than I would now after February's inflation
report.
I think the $1 million question for me right now, like what I'm just, like, it's so funny. Hatem is like, what happened? I wake up at like 5 a.m. the day the CPI report comes out. I'm like, who have I become? I'm this big data nerd.
She texts me about the CPI report at 5 a.m.
It's like, Hatem, did you see it? It's down. Inflation's down. I never thought I'd be that person, but here I am. So anyway, but I think the $1 million question was so we, my estimation right now is we said there's going to be recovery. It's going to be bumpy. It's 2 steps forward, 1 step back. Was February the 1 step back, or is it the beginning of a trend? I'm hopeful that the last CPI report and the last jobs report were maybe a blip on the radar screen, a blip in the recovery, and that the trend will continue and the March numbers will be good. But if we have another month of,
to put that in perspective, what you're saying, Mariam, is that we had a strong job report and we had a strong CPI report, which means that rates are not going to come down.
Exactly. Yeah. And so the Fed, and Powell had come up, took his foot off the brakes at that press conference right before these numbers came out, and maybe he regrets it. Maybe now he's going to get even more aggressive at the next Fed meeting. There's a lot of data that's going to come out between now and then.
Right.
But rates right now, I think I checked this morning, are hovering closer to 7%.
Right.
So just to give you guys kind of a large picture, we feel like the housing market troughed in November. When rates were like hitting 7.2, 7.3%, that was the bottom of the barrel. And we've started a slow recovery since then, right? What we saw really happen is when the new year started, the buyers were out in full force. But the issue is the sellers it's a stalemate with sellers. So 85% of homeowners right now are locked in at a rate far lower than the rates that exist today. So this is really a story about sellers more than it is buyers. So if you're a buyer, you're thinking, well, what could have been if I bought last year? I could have gotten locked in at this 30-year, 3% rate. That being said, you were contending with bidding wars, so it's like becomes a wash. But if you're a seller, you have a piece of paper in front of you that shows your mortgage rate, and you are comparing it in real time to what's out there. So the rates have a 5 in front of them, because a lot of people are locked in at 4, high 3, a 5. If you really want to move, you'll do it. You'll pull the trigger. As it gets closer to 7, people are like, screw it. And the other part of it is that if you own an asset at a 30-year fixed rate of, 2.5 or 3%, that's an amazing deal. You're not going to let go of it. Maybe you'll rent it out, maybe you'll, but as an investment, it's a good investment to keep that. And so I get it. I'm not selling my house. I refied when rates were super low. And so, I think that's the really hard part. So you've got this mix, like inventory is just the Achilles heel. You've got this mix of a lack of building, as we mentioned earlier. You've got sellers who don't want to sell. Another generational thing that's happening is boomers don't leave their house. The generation before them went to senior living communities, went to facilities. The boomers are like, I'm going to create a tram up my stairs. I don't care. I am not leaving this house. I will die here, And so the cycle of old people selling their homes and young people buying them is stuck right now. So there's so many factors, but inventory is the crux of it, and it's the biggest issue. So,
Yeah, because basically the rate move makes housing 50% more expensive.
Oh yeah.
So we should have seen
more than that even.
Well, so when you go from 3 to 6, even though it's 100% jump, if you amortize it, it's a 50% increase basically.
Yep.
So traditionally, let's say we had a normal balance of housing, not even all the other factors that you talked about, but we just had enough housing. Right? The market should have gone down the 25 to 30% that you talked about, because just simple math, affordability.
Exactly.
Right? But because there's no housing, because people don't want to let go of their properties, because of all this stuff, there's a stalemate, and the consumer has been resilient. So the economy has propped up, has stayed. So we're seeing, we must see this little dip, and clients ask me all the time now, is like, well, when's the right time to buy? When's the right time to buy? I go, honestly, I don't know what to tell you. Like, we got to see where this year sort of ends up. But to think that you're going to get a 30% discount or a 25% discount in the market, probably not.
Yeah.
We might see another 5 to 10% dip.
Yeah.
Maybe.
But not that much. Prices are very resilient. Usually during a downturn, you see prices go down way more than this.
Yeah.
And the thing I would also say is that, like, there might be people who are like, well, I'm going to wait till it goes back down to 2.5 or 3. That might never happen.
That's probably never going to happen.
And so it's like, I just think it's like, can you afford the payment? Do you like the house?
Right.
You can refi in the future.
Are you going to be there for 5 years?
That's the advice we gave our clients all the time, is it doesn't really matter what rate is. If you can afford the house, you can afford the payment itself, right? At the end of the day, that's it. You need to live somewhere.
Yeah.
Right?
And if it's going to be there for 5 years, you'll have time to withstand the price fluctuation. So don't even worry about it.
Yeah.
And I tell my clients that the 3% era is done. Like, that is a crisis level interest rate. And people don't really concept that, because, like, recency bias, as we discussed before, right? The problem is the recency happened for 10 years and people just got stuck in it. But that was a crisis level interest rate that we had for more than a decade. And now we have to reset, because this is where rates technically should be.
That's right.
On the long term.
Yeah.
Yeah. I mean, it's all emotions, right? Like, and like human psychology around it. Like, 7% feels awful after it was at 2 and 3%, right?
Yeah.
But then when you were at 7% for a while, and then it dropped down to, low 6s, high 5s, and a lot of people were getting locked in at 5%. That feels good, right?
Yeah.
And so that's why the buyers were back. But now we're back up. And one of the things, by the way, that I've heard from a lot of agents is it's not even just the price, it's the volatility. People just want it to be stable. So they're like, all right, I'm getting back out there. Rates I can get locked in at a 6% rate. Then suddenly they jump up to 6.8. And so it's the up and down where people are like, okay, wait a minute, I'm going to wait a little bit here. It just feels uneasy to them.
And it's about time real estate dealt with some volatility.
Well, I think the good news is frankly, like, I think we're getting to the kind of an era where people are more resigned to this new reality, right? Yeah. New rates, higher rates is where we're going to be. And as you said, people will get used to it. And I think people will come back to kind of get into really needing to buy homes and really kind of making that commitment. I mean, I've seen clients lock rates for 4.5%, 5% last couple of weeks.
Banks are getting creative too, right? They're doing these adjustable rates. Yeah. They're doing all kinds of stuff that to try to entice people. Say, hey, I know the headline rate says you're paying 6.5, but here we'll get you at 4.5 for a 10-year adjustable or whatever. Yeah.
That's awesome. Again, like, it's nobody wanted this kind of volatility, but we're coming out of a really, really interesting time, and kind of coming back to normalcy, right? Is going to take these dislocations. So your insights have been really amazing, Mariam. Thank you for sharing them. Can you talk a little bit about the high net worth / higher end part of the market? I know you guys, Redfin has like the 5 million plus home. You have different kind of reporting and so forth. But what are you seeing there? I mean, that's a different market too in general.
Yeah. So here's the thing: the luxury market skyrocketed during the pandemic. Yep. So I think there's just so much about like what's happening right now where if you could create a straight line from 2020 and pretend like the pandemic never happened, we'd actually be in a good place, right? But because we went here and then to here, people feel so terrible about it. But like, if
so true.
Yeah, this is what we talk about with our clients. The great reset, as I call it.
Yeah. And it's like, yes, do I wish I cashed out on everything when it was the height? Yes. But at the end of the day, we're doing good. And anyway, so the luxury market went up a lot during the pandemic. It has dropped, like there are places where, you're seeing, large drop-offs in prices in luxury homes, especially in tech sector areas. So, there's, obviously high net worth individuals are more driven by their stock portfolios, and stock being down is rough. They don't want to sell when it's low. And so luxury homes have taken a hit. The thing I feel like, if you were in the market for a luxury home, there's deals to be had right now. And so I don't know, like I would say, the homes that are moving are your 1 million to maybe even like, let me go down even like 700,000 to 1.3, like, homes that don't need a lot of work, that are priced right. They're actually getting bidding wars. Like those homes are really selling. The luxury homes are sitting on the market. And I just think that if I were in the market for it, if I could afford the payment and refi, it's kind of a good time to buy a luxury home and get a deal, to be honest with you.
It's funny you say that. I talked to my broker who does a lot of these homes, and he's like, absolutely. People are coming in. There's all cash offers because you can negotiate down. You know what I mean? If you don't have to sell stock right now, you're in a very, very good position.
Are they moving though? Because if you're a high net worth seller and you're fixed to a price,
they're not moving
right?
as fast.
Yeah, because like I'm selling a $10 million home, and let's say I'm a guy who's got 10 homes, and I just don't care if it moves or not. Frankly, I'm not going to budge nearly. I think that's what he told us last time. And granted, this was like months ago.
And when I say luxury, I mean there's different definitions of it. Like in LA, where like luxury is like 20 million, but I mean maybe it is the like $2 to $3 million range, where you could get a deal. You're right. There are some people who are just not motivated to sell. Others aren't. So it depends. I've also, by the way, seen scenarios where there are people who are ultra wealthy that own tons of properties also kind of don't care the other way. They're like, okay, fine, give them a couple $100,000 off. Like, you know what I mean? Like, I think it goes either way. Like, I don't have to sell because I have all this money, or it's like, meh, I'll let it go.
That's great. So obviously nobody has a crystal ball, and I don't think everyone is fixated on interest rates. And, when we talk a lot here about what the Fed is going to do, but ultimately people need to live some places, right? So, and it really doesn't matter if it's 5%, 6%, right? But if you can afford it, you just have to buy it. And just to kind of sum up what you're saying here, because I think it's really important, it's advice that we give our clients all the time, right? Don't try to time it. Like you don't know what's going to happen. Like I don't know what Jay Powell is going to say in March 12th, So, and whatever he says should not affect the decision that you need to make for your family, And I think that's really advice that's pervasive through.
I agree. I think the one caveat for people to think about though is, right, we're seeing, other than in tech, we're seeing a very resilient job market. I think 6 months ago, people were a lot more worried about recession than they are right now. But I don't think that's off the table.
It's not.
Right. So even if it's a 50-50 chance, I do think that people do need to think about that, because that's ultimately, right, we talked about all the positives that are still in place for real estate because of, the demographics and the fact that you locked in and all this kind of stuff. But if the economy goes into a recession, even if it's not a really deep recession, right, people lose their jobs. People lose their jobs means they can't pay their mortgage. People can't pay their mortgage means home turnover happens. And this will affect the housing market because housing is economics 101. So I think people have, on this spending spree and this jobs report, have discounted the idea of a recession. But I do think this is kind of why I say, like, this year will tell us kind of the next 6 months will kind of tell us where we're going.
And by the way, I totally get the idea of, it totally depends on what you need. Like if you're desperate for a house and you really need it right now, that's different. If you can wait, I mean, I think we've talked internally with some of our economists that like rates can, really balance out maybe mid to late year, be, closer to the five range, And in that case, I really think what'll happen is it'll end most of the stalemate that you're seeing with the inventory and the sellers. And then you'll be in a different market where you have more options. You can get probably a lower rate. Now, this is all assuming that inflation continues its downward trend, but I do think that you're going to see it's good. By the way, the thing I will say that's weird is the seasonality is off. Usually it's the spring that's crazy. We might see a crazy summer, like people, because people right now, if you're going to list your home in the spring, you're working on that now. You're doing that now, and rates just popped up. It's kind of bad timing. So you might see just not a lot of people selling as they usually do in March and April. And you might see that offset to June, July, August, and that's okay. That's still before school starts. And so, you're just seeing also, seasonality change a little bit about when the transactions happen.
Yeah.
And so I just think that once the sellers end their stalemate, you're going to just see more balance, right? You're going to see people, like my analogy with buyers right now is the buyers are over it. They've acclimated to the rates. They're fine with it, but they go out and they're like, but there's just nothing to buy, in a lot of places. I think that's the issue. And so they go back to the sidelines and wait for inventory to come up.
We were bullish on home buyers before this conversation. I think you just made me even more bullish on
why haven't they made more homes? They should have been killing it. They should have been killing it over the last 3 years, 4 years,
maybe.
But I think we talked about this even like a year ago, where the prices of commodities have come down so much. So now they can actually build normally. I think it's huge. The one other caveat I would ask is so we're getting some more inventory that's coming online soon.
Yeah, that was an article yesterday.
That was a Wall Street Journal. Yeah. And then also that rents have had their biggest decline.
Yes, rents are going down.
In 5 years or something like that.
Yeah.
So that should possibly help affordability of homes.
Yes, I think so. Yeah, for sure. I mean, also the rental market is another one that if I could create a straight line from the beginning of the pandemic, it's just they went insanely crazy. They went up and untenable levels. And so
25%, rates increased by 25% in a year, basically. Exactly. It was crazy.
And obviously some of that is delayed because you see people locked in on 1-year leases. And so you need that to expire. But and I think that actually rental prices might also, there's like I talked about those people who are like, you know what, I'm locked in at a rate and the price I can get on rentals so high that the best decision for me is not to sell and rent it out. Well, that math might change. If interest rates go down and rentals go down, then you might look at it and say, actually, I'm just going to offload it and sell it,
Yeah. That would be very helpful.
It sounds like there's a lot of variables.
Yeah. Thank you. Anything else that you're seeing as far as trends going on? Obviously, I can't even imagine the amount of data that you guys are looking at and where people are going and stuff. Anything glaring that you guys are seeing that's not?
The thing I will say is that there's a generational thing I wanted to point out that I kind of touched on. We call them internally mortgage millennials. So you've got older millennials and Gen Xers like us who had the time to save money and buy a home before housing went crazy, right? And they're in and they're good and they got lucky. And it's what I think about a lot is the younger generation, right? And is there going to be a window for them or not? I think that there are a lot of people, and I don't know, I was actually going to ask you guys if you're seeing this. I've heard it anecdotally that are people who really wanted to own a home, feel like they can't get there. And so they're planning their wealth accumulation and their retirement plans without the asset of home ownership in there. So is it stock? I mean, so I have this theory that the reason young people are going so crazy with NFTs and crypto is because they're just looking for something the opportunity that their parents had, I don't know. Is that the reason this stuff is happening?
There is a 3-part question there, right? So I think from what we see, I think Ayal says the same thing, is that there is a lot of despair. You're right. They're just, they just can't afford anything, right? So they almost gave up, and our goal is to say, hey, listen, stay the course. There's going to be opportunity for you. You're going to make more money and so forth, right? Yeah. But you're right. You're making 100, 150 grand. There is no opportunity. There's nothing. You know what I mean?
Where we are, at least.
Where we are, right? So you may have to move to another place, and thankfully there is work from home opportunities
Yeah.
in other places, right?
But it still is, I would say, it still is probably the number one goal for every client
It
I
is,
see who doesn't own a home,
Right.
is to own at least own their own residence. There are a few who just like, I just don't care anymore.
Yeah.
And it tends to be the tech people. It tends to be the people who are like, they'll skip around jobs every couple of years.
Yeah.
Like, so they're not tied down to anything, which makes sense.
Yeah.
Yeah.
We're also seeing, I had a conversation this morning with someone who moved to Portugal.
Oh, wow.
He's a tech guy. He's like, fuck it. I can't make money and I can't buy a house in America. I'm going to buy a place in Europe, So if you have,
Europe is very cheap.
Yes.
yeah, right.
Yeah.
I mean, it's not anymore. Like, it's no longer as cheap as it was 2 years
They're
ago.
not giving houses away like they were in Italy. They're like, here, just
Correct,
have this
exactly.
land. It was like homesteading in the 1800s.
Priscilla, please.
So people are being creative, but ultimately, I think the crypto and NFT stuff, that's just a symptom of
Pure speculation, FOMO, free money trading.
Yeah.
They all still have the goal of buying. Most of them, I should say, still have the goal of buying that house. It's still part of that American dream.
Just delayed. Delayed.
Yeah, exactly. But sometimes to their detriment, to the point where I tell some of the younger people that we see is, listen, I understand that buying a home is a dream, but what you don't want to be in is in a position where all of your money is going to your home.
Yeah.
And poor, right?
That's being house poor, being house rich, cash poor, right? Is not what you want to be. So don't get fixated on this idea that you have to have this in your life. It's great.
You'll
we
get
want
there
it,
one day, hopefully.
Exactly, and that's what we're saying. And I do think there's a macro, as we're talking about millennial and generational shifts. I've had this theory, and it's disclaimer: this is not based on data. This is based, and I'm a data guy.
Yeah.
This is based on my own opinion, and I'm sure I can find it. The fact that 30 years ago, 40 years ago, when our parents were buying houses, most of the time it was a one-income household.
That's right.
Right.
Yeah.
And now we have mostly dual income households. Like that's the majority of people now, and that's naturally going to drive the price up also.
Yep.
Because but it also makes it quote unquote more affordable.
Yeah.
Because you have two people putting into the pot versus one.
That's right.
And so I do think this, hopefully women are going to start making as much money as men do for the same job, which they should.
I'm okay with that.
and minorities make the same amount of money as white people do, which they should.
Yeah.
That will bring the sort of ability to buy a home closer to people as there's more money together put in this pot.
Yeah.
Well, thank you for this amazing conversation, Mariam. I really appreciate you coming on. I have one last question. I've always admired your journey, your grit. You've always aimed high and just crushed it over and over. Even, I know Nick and I always say, oh my God, she's always going to crush it, like beyond belief.
He really loves my type A personality, let me tell you.
I think so. It has to. You gave two pieces of advice. One, don't cut your hair during
I've never cut your hair after a breakup. Never do it.
And then get back to the office. Those are really awesome advice, I think. What other advice can you give to young women, just people who just want to get out there and just really do great things? Like I anything you can give would be amazing.
So I think the thing that I will say that I feel based on my experience, like going from Disney to Redfin, is that I love Disney as a company. Loved the leadership at the time there. I worked with amazing, really smart people. I'm not a huge consumer of Disney products. I don't like superhero movies. I don't like the parks. I go there for my kids. But it wasn't like the brand is amazing. It didn't really pertain to me. I didn't I didn't wake up in the morning and I'm like, a new Marvel superhero movie. Yes. Nick did, just not me. But I love real estate. I love it. I live and breathe it. I was addicted to Redfin years before I ever even talked to them for the first time. I believe in the mission of the company. I believe in what we're doing, making it more affordable to buy and sell a home. And it is just a huge passion of mine, and it really carries me through the tough times.
Awesome.
So I would say, finding like your passion, the size of the company. I've realized I really like being at a more mid-sized company than a huge one, because I feel like my impact is so much more tangible. I love the people I work with. It is a very there's no politics. Like there's very little politics. Like we have this joke at Redfin, people are too nice to stab each other in the back. They're too busy helping each other to like worry about stabbing you in the back or playing corporate politics. And so all my energy is now towards productive work stuff. And so anyway, I just feel like I found the culture that really works for me. I found a sector I'm very passionate about and was passionate about for years. And it really makes a difference, I think. And so I just think that those things combined really has helped me grow a lot in the last 4 years. And I don't know that I would have grown as much had I stayed. And so I just think it's like so cheesy. It's like find your passion and what you love, but it is true. Like, do you really feel like you wake up every day happy about the people you work with and the mission of the company and what you're doing? And that just gets you through really hard times, I think. So
amazing advice. No, it's not cheesy. It's not a cliche. I think it's super important. Like if it doesn't fire you up every morning, like what are you doing? And it's true across the board. So thank you again for this amazing time. We may have you back soon as we figure out what happens with Powell and the rest.
Your crystal ball recommendation.
I was just saying, this is such a time capsule. Like I'm gonna watch this in 6 months and be like, oh God, but I'm just gonna leave it with this. March CPI, I'm waking up at 5 a.m. See you, Hatem.
I'll be there.
Gonna drop more than expected. I hope so.
Let's go. We hope to.
Yeah, we hope to.
I just want to be in a phase where good news is good news again.
It's good news, yeah.
I'm ready for that.
Yeah, we'll be there soon.
Yeah.
Thank you again,
Awesome.
Mariam. That was really awesome insight. Yeah, it was really fun.
I love that.
Thank you.
All right.
Cheers.
Bye.
Okay. Bye.
Bye.